These are 12 of the best real estate stocks right now in 2024. Many of them are REITs, and combined they're worth more than $760 billion this year. In this video, we're covering all of them, from the smallest to the biggest moneymakers, to save the best until the end, starting with number 12, Extra Space Storage. Right now, Extra Space Storage stock has a $32 billion market cap, and it trades $18 below its 52-week highs. Extra Space has been a dividend growth stock. They have a 4.5% shareholder yield, and they've grown this in each of the last 14 years. Extra Space Storage is a REIT that owns, operates, and manages 3,700 self-storage properties across the United States. Today, two super investors own the stock, and that's First Eagle Investment Management and Chris Davis, who happens to be on the board of Berkshire Hathaway. Extra Space has been a long-term compounder. From their lows during the global financial crisis, the stock is up nearly 30 times, though they still trade 36% off their all-time highs hit back in 2021. The company looks split compared to how they trade versus their projected free cash flows versus a DCF analysis. Still, despite a recent climb that saw their stock price increase by more than $40 per share, it looks like the company is still undervalued today, perhaps by as much as 20%. At number 11, we have CoStar Group. This $36 billion company trades $10 off of their 52-week highs. CoStar is one of the leading providers of commercial real estate data and marketplace listings. It owns and operates websites and brands like CoStar Suite, LoopNet, Apartments.com, BizBuySell, and Lands of America. The company doesn't pay dividends, and it just slightly dilutes shareholders through stock-based compensation. Right now, three super investors own CoStar Group. This is led by Chuck Ockery, who has 5.8% of his portfolio in the company and added to it in the most recent quarter, and Wally Weitz, who's also on the board of Berkshire Hathaway. CoStar Group is both a long-term compounder, and they're also up more than 30 times from their lows during the global financial crisis. Today, it seems the company is still being valued on its abilities to grow, as it's way out ahead of its earnings or its free cash flows. With those embedded growth assumptions, a Guru Focus value comes in at $91 per share. That's around $5 above their current stock price. Cracking the top 10 at number 10, we have the Goodman Group. This is a $43 billion Australian real estate company that, since it was listed in 2005, is up more than 4 times. Goodman Group typically develops and manages properties for either tenants or fund management clients. In the last few years, we've seen a boom in the Australian and New Zealand real estate markets, and that's reflected here in Goodman's valuations. The company is trading way ahead of its asset value or what it expects to produce from free cash flows. Even with strong assumptions for future growth, it looks like the company may be overvalued by as much as 26%, at least according to Guru Focus. At number 9, we have Crown Castle. This is a $45 billion company that trades $18 below their 52-week highs. Crown Castle is a REIT that owns and leases 40,000 cell towers throughout the United States. Their cell towers and fiber networks are primarily located in the biggest U.S. cities. Three super investors, led by the Bill and Melinda Gates Foundation Trust, have small holdings in the stock. Free cash flows are most important for the company, and it looks like they're valued out above these, though they are trading well below their historical sales numbers. When we zoom out, the company has done better for shareholders, especially since its low after the dot-com bubble crash. Today, a GF value for the company comes in at $140 per share, letting us know the stock may be undervalued by as much as 29%. Number 8 is Digital Realty. It's a $45 billion company trading $10 below its 52-week highs. Digital Realty is owned by two super investors with yet another small position from Chris Davis. Right now, the company pays a 3.38% dividend yield, and they've kept this flat in the last couple of years. Digital Realty is a REIT that owns and operates over 300 data centers worldwide. It does everything from leasing small cabinets and providing services to tenants, to leasing full data centers to hyperscalers like Microsoft, Google, and Amazon. In its history, the company's done very well for shareholders, and it's up more than 11 times from 2004. Right now, it trades just 18% off its all-time highs. With their current valuations, the company seems to be around fairly valued. Number 7 on our list is Realty Income, better known as the monthly dividend company. They're a dividend aristocrat paying monthly dividends that right now has a huge 5.91% dividend yield. Today, the company's market cap is $48 billion, and it trades in between its 52-week high and low. Digital Realty owns more than 13,000 mostly triple net single tenant properties, though it recently has expanded into industrial, gaming, office, manufacturing, and distribution properties through recent acquisitions. There are no super investors with the position today. Realty Income looks split between its current free cash flows and their projections for the future, but they do trade well below their historical multiples. Because of this discount, a GF value comes in at $72 per share, saying the company may be undervalued by as much as 26%. Public Storage is a $50.5 billion company that trades in between its 52-week high and low, coming in at number 6 on our list. The company's name gives itself away. It's the largest owner of self-storage facilities with more than 3,000 throughout the United States. The stock has done very well since the early 90s when it's up more than 50 times from its lows. Wouldn't you know, Chris Davis is the only super investor with just a very small holding. In its history, the company's paid stable dividends. Right now, they have a 4.32% dividend yield. The company trades well compared to its past sales, but it looks like it's out ahead of its current or its projected free cash flows. Still, a GF value for the stock comes in at $343 per share, saying it may be undervalued. In the top 5, at number 5, we have Welltower, which is an owner of healthcare properties in the United States, Canada, and the UK. Welltower is a $60 billion business that trades at its 52-week highs. The company today pays a 2.4% dividend yield after cutting this in 2020. Yet again, Chris Davis is the only super investor with just a small percentage of his portfolio. Welltower's done okay for shareholders in its history. Much of its outperformance came from the late 90s up until about 2020. Compared to its valuations, the company is currently trading out ahead of these. This is why a GF value comes in at $90 per share, and that's $12 below their current stock price. This one may be slightly overvalued. Simon Property Group comes in at number 4. It's the second biggest REIT in the US, and it's the biggest mall owner in the country. Right now, it's a $48.5 billion market cap that trades $10 below its 52-week highs. Despite big crashes during the global financial crisis and the pandemic, Simon otherwise has been stable for shareholders. They recently restarted their dividend growth, and right now the company pays a market-beating 5.47% dividend yield. Simon's owned by 2 super investors who both trimmed in the most recent quarter, led by Hillman Value Fund. Today, the company trades at around historical sales levels. They're well ahead of their free cash flows, however. GF value comes in at $134 per share, but it looks like there's a slight downtrend in the coming years. Number 3 on our list of real estate stocks is Equinix. They're a REIT operating 260 data centers worldwide. The company went public during the dot-com bubble, and since its IPO, its shares haven't even doubled. However, from their lows when they almost went broke in the early 2000s, the company's been one of the best stocks out there. They have a $76 billion market cap, and they trade $100 above their 52-week lows. This is still down $130 from their highs. They're also a dividend growth stock, and today they've grown their dividends in the last 9 years, and they pay a 2.19% dividend yield. Equinix is owned by 3 super investors who have just very small positions in the company. It looks like they're trading above their historical sales and well above their abilities to generate cash flows. Still, there are a lot of future growth assumptions embedded in their valuations, and today a GF value comes in at $833 per share. American Tower is one of the top REITs on our list, coming in at number 2. They're the biggest cell tower operator in the world, owning and operating 220,000. Recently, they acquired CoreSite, and today they operate 28 data centers in 10 US markets. American Tower is one of Chuck Akre's most beloved positions of all time. Today, it still makes up 10% of his portfolio, and it's owned by 6 super investors. The company is also a dividend growth stock, growing these in each of the last 12 years, and today paying a 3.44% dividend yield. Right now, American Tower is a $91 billion business that trades $27 below its 52-week highs. From its lows in the 2000s until today, it's gone up more than 200 times. Yet still, from its all-time high, which it hit a few years ago, it's down 38%. Today, the company looks attractive compared to its past sales multiples, but they still look ahead of their current free cash flows. The cell tower landscape may be reshaped during the move to 5G, but the company looks like it's still priced below its GF value, which today comes in at $231 per share. The real estate stock at the top of our list is vital for e-commerce. It's Prologis. Today, they're a $102 billion market cap that trades $28 below their 52-week high. Prologis was formed by the June 2011 merger of A&B Property and Prologis Trust. Today, the company operates 1.2 billion square feet of high-quality industrial and logistic facilities around the world. The company pays a 3.61% dividend yield, and they're a dividend growth stock, increasing these in each of the last 10 years. As a public business, it's done okay for shareholders, but things really picked up after the global financial crisis. Since then, their stock is up 17 times. 3 super investors own Prologis today, led by Third Avenue Management. Chris Davis also holds a position, as he has in most of these stocks. The company's values are split. They're slightly above their projected free cash flows, but they're well below a DCF, and they're also below their historical sales. In light of this, a GF value comes in at $145 per share, implying more than a 27% upside for the business. Let me know in the comments which stocks you want me to cover in depth on the channel. If you want to learn more about the opportunities in the current market, watch the next video and sign up for our investing tools linked in the description below.